before IFRS 18, you would expect IAS 19 to be tested only as part of cash flow statement questions. So in there, we were supposed to explain why this or that adjustment is needed or is not needed. So for example, remeasurement component will not be adjusted because that is included in OCI. So it's not included as part of operating profit. That is the first figure in cash from operating activities. Finance cost. Well, finance cost is not included in operating profit, so no adjustment for non-cash expenses is needed. And since it's not finance cost that is paid, and it's just the contributions to the plan that is paid, we don't include it into the cash from financing activities. As for the service cost was included as part of operating profit, so it will have to be added back as non-cash expense, and instead we would take the contributions that were paid to the plan and we would deduct them in a cash calculation from operating activities because they relate to employees. Now, it's going to be, most likely we're going to be tested IAS 19 in conjunction with P&L. Because now we have IFRS 18 that describes the new layout of P&L. What is going to be different? Now we will need to distinguish between where operating part of P&L what is going to be included in operating part of the P&L and as part of financing activities of P&L. So operating category is going to include current service cost and past service cost because this relates to the main activity to the employees working. As for interest component, it's going to be included as part of financing activities. Now, it is important to distinguish between P&L and cash flow because for cash flow, we care about the cash that was paid. And there will be no cash that was paid for financing for interest cost in our pension plans. Instead, we're going to include all of the contributions as part of operating cash flows. But for P&L, we are going to include this interest component into financing category of P&L. On top of that, there could be some discursive IAS 19 questions. So we can be asked about plan amendments, curtailment and settlements. So what could happen is that you are going to offer employees more. You are going to say, oh, you know what? Before we promised, let's say that much for each year of your working for our company. Now we want to increase the amount. That is going to actually relate to the past service. So for the previous years that this very employee worked for us, so we're going to call it past service cost, but we are going to recognize this the same as current cost. If we decided to cancel the plan, to curtail the plan because, for example, we are going to perform restructuring, then you would need to explain when this past service cost has to be recognized. So it's going to be the earlier when this change occurs or when the related restructuring or termination cost is recognized. So if you pay termination penalty to your employees earlier, then this is when you are going to recognize this past service cost adjustment. And also, sometimes we are tested on asset ceiling. So this means when the assets actually increase the liability. So let's say market fluctuated and the assets became so very generating that now we have more of them. And we need to remember that we can recognize a surplus only within the amount of the present value of refunds available or reductions in future contributions. So this is called the asset ceiling, and that is going to be the amount based on which the interest cost is going to be calculated later. We also are going to be tested on the termination benefit. So when is that we're going to recognize the liability and related expense for the fact that we are firing employees? That is going to be the earlier of when the company cannot no longer withdraw the offer or recognize its related restructuring cost. So if we made an offer that we cannot withdraw to employees, so for example, you take the money and leave, or you continue to work, but it's going to be different type of work, or we started to experience restructuring costs. So the earlier of this is going to be termination benefits. And we also are going to be asked about, let's say, the contradiction between the benefit plan and the framework. So, for example, when we are talking about remeasurement component, the asset ceiling, and so on, is it in line with the definitions of incomes, expenses, whether it's in line with the liability asset definition, and so on. So, as of now, I would expect that IAS 19 would be tested either as your ability to discuss IFRS 18 presentation of P&L or as cash flow statement question, but it could be that some minor discussive questions on theory will be tested. And that is it. And I will see you in the forthcoming of the episodes of this very podcast to learn more about how ACCA tests different IFRS standards in SBR exam. So I will see you next.